All right, our next group of illustrious speakers starts with the gentleman that will be hosting our next panel. You may know him from Fast Money. He's a founder of Seymour Asset Management and a cannabis insider at CNBC. Here, introducing the panelists for differentiating top MSO investment opportunities. Make some noise for Tim Seymour.
Hello. Am I live? I'm live. Really exciting. First of all, Benzinga, this is the event of cannabis of 22 and 23 and probably 24. So great to have everybody together. I'd like to bring on our panel. We've got Aaron Miles of Verano. Come onto the stage, Aaron. This is differentiating MSO opportunities. We've got Emily Paxhia of Poseidon. Aaron is differentiating as we speak. Grab a seat on the end in those shorts and flip-flops. Who's next? Jennifer Drake, Jen Drake of Air, to the stage, please. And finally, Matt Darin of Curaleaf to the stage. And we've got about 40 minutes to solve all the problems in the industry. In fact, we don't have any problems. And if you think about differentiation, it's funny because even on a day like today, you can look around the market and say that Netflix is not really differentiating itself from a cannabis stock today either. So we've got a panel that I think is here to not only talk about what they do and what they do that differentiates, and Emily from her investor chair, I think, can also help blend the view of really how we should all be looking at investing in these companies that really are a geographic footprint and setting out to lead this business nationally. But I think the key really right now is to talk to these leaders, and essentially this is key C-suite, whether it's president, CFO, COO, this is the group you want to listen to. And I guess the goal for this panel is let's keep this interactive. Let's not be afraid to say something mildly controversial if we can. But I think the first thing that is probably worth talking about is the market dynamic, because the market right now isn't differentiating between cannabis companies. In fact, if you look at the screens, and hopefully we're not looking at them every single minute of the day, because it's actually not doing you a lot of good. These are companies that are executing every single day. But that cannabis companies really are trading with a correlation of essentially one. They're all trading together, and that belies the dynamics of each one of these companies that are on stage here. So quickly, actually, I want everyone to just briefly introduce yourself, and then I'm going to dive in with a couple questions. Matt, go ahead.
Hi, Matt Darin. I am U.S. President for Curaleaf. Been in the industry for about 8 years now. Started out when Illinois passed the medical cannabis law in August of 2013. Was one of the founders at Grassroots that merged with Curaleaf in 2020.
Jen.
Hi, Jen Drake, Co-Chief Operating Officer at AIR. Have been with AIR really since the beginning and helped build our business to the 8-state operator that we are today, and looking forward to continuing to expand.
Thanks, Jen. Emily.
Hi, Emily Paxhia, co-founder, managing partner of Poseidon. Poseidon was founded in 2014, investing in cannabis. Our most recent thing is we launched a ETF, PSDN. Very excited to be here talking about the differentiation in the market.
Aaron Miles, hello. Chief Investment Officer for Verano. We're a 15-state operator, soon to be 18 once we close Goodness Growth acquisition here. But I'm the Chief Investment Officer. Have been in the industry for about 4 years now. Helped take Cresco public in 2018. Transitioned over to Verano. Had a brief stint at the New York Stock Exchange, but about 20 years of capital markets experience here.
So Emily, I'm going to put you on the spot a minute. And by the way, I'm not sure the world has ever seen Emily Paxhia and Jen Drake sitting next to each other or in the same place at the same time. There are rumors that you might, it's a bad joke, by the way, but that they're the same people. But they're not, and they're both extraordinary on their own right. Emily, this is a lot of responsibility, but as an investor, I want you to help us understand how you think about the differentiation of the sector, because clearly you're invested across the space. You've been doing this for a long time. You know the differences of these companies, but for some of the folks out there, how would you explain that and what you're looking for?
Yeah, so since we've been investing in since January 2014, we were investing in these companies before the term MSO even existed, and before you could even conceive of taking a company that had vertical operations in multiple states and actually pull it up into one company. So pretty exciting to see how this has evolved, and Tim is absolutely right. We watch how the sector trades as a cohort. Everything seems to move in sympathy with one another, but as we're watching how these companies are growing and defining themselves, we're looking at different attributes and how they're actually quite different. And one of the best ways to see this is through the quarterly earnings calls, and you can hear how the CEOs, CFOs, and the teams speak about what is important in their businesses. So some of the things we look at are the brands of the organization, both retail and product brands, and how they're thinking about their branding, product strategies, price points, the way that they're approaching it, partnerships. So that whole strategy is one thing, and you can see how some of the different operators definitely approach it differently. The other thing we look at is their relationship to wholesaling, for example. And so you can see very clear trends in terms of the percentages allocated to wholesaling versus retail and different strategies around that. And then, as you've heard from my fellow panelists, there's also the footprint of these operations. And you can look at, are they state to state, how many states, and also their focus on where their retail is located. Are they on Main and Main, or are they focusing on other strategies around retail location?
Really helpful. And if you think about the world, if you were sitting at Benzinga's event in 2018 and they were here, the discussion about geographic footprint seemed to dominate.
Yes.
And it seemed to be that size and strength was equated to how many different states you had on the map.
Yep.
And we've seen both sides of this. We've seen companies that frankly have executed, and these companies have all executed extraordinarily in the states that they've been in. We've seen companies that felt that planting a flag in every state that they could get to really either led to financial distress or a collection of assets that didn't frankly go together. So real quick, Matt, talk about Curaleaf's footprint is 23 states.
Yep, 23 states nationally.
And talk about how you view that as a differentiator. Obviously, there are some that at some point that said, how can you really execute across 23 states? There's a lot of inefficiencies. Unfortunately, investing in this sector, these companies are forced to be vertically integrated. On some level, that's really great when it comes to profitability in certain periods of the market. At other times, it's pretty inefficient. So talk about that.
Yeah, so look, I remember the planting the flag stage. I was very much part of that stage where it was about how many states you were in and how many licenses you held and those types of data points. That was long before, EBITDA and things like that were being focused on. So, the tides have turned quickly and the laws of economics and gravity have begun to come into place. So, look, Curaleaf's roots were in the limited license Northeast markets where you could have vertical integration, strong margin profiles, all those places. So, and as we spread, throughout the country and some of the central markets, the Midwest markets that had similar profiles, that was really the roots of the business. But we made a decision years ago that, in order to be the most competitive, we wanted to have a national footprint. So what we call our investment markets, places like California, Colorado, Michigan, that might not have the margin profile or the supply-demand economics of Illinois or New Jersey, we felt it was important to be in those markets, to build our brands, to build our distribution, to understand what the trends were coming out of the West Coast that we could apply to the East Coast. And so that's really been our strategy.
Having perspective on a national level, I think, really is critical at a time when the brand evolution is still very early. Jen, I've heard you refer to your footprint as a Goldilocks footprint. And what does that mean, though? I mean, because ultimately, at times, the limited license states have looked as if they were the places everyone wanted to be. More margin degradation in those states right now on a relative basis than we're seeing even in some of the states that we're seeing as, particularly wide open.
Well, when we say a Goldilocks footprint, an optimized footprint, it really comes from kind of what we think of as the North Stars of being a great cannabis company. One is that this is a hard business. And one of the hardest things about this business is having great people and a great culture, because this business is being built from scratch. So if you dilute your people too much, in our view, like there are different ways to skin a cat, this is the Air way. We think that you can be in 12 to 15 states and hit 80% of the US consumer wallet without diluting your talent too much, because talent is the most important thing in this business, because it is what allows you to do everything else. And people don't understand how hard it is to grow good weed. It is really hard. And the foundation, and growing good weed is the foundation of all of your brands, all of your products. You can't make good brands with bad weed. So cultivation is incredibly important to us, and that requires a lot of investment in people and processes and culture. But none of that happens without people, and it is incredibly hard. Everybody out here, whether you're a cannabis investor, or you run your own business, or you just work in a business, you know how hard it is to find good people in your business. It's so much harder in cannabis. So to us, don't dilute your people, have the Goldilocks footprint, 12 to 15 states, 80% of the consumer wallet, because that's what allows you to go to your North Stars of people and growing great weed.
A quick follow-up. Are you finding that, is there almost a resource matching dynamic state by state that you have to follow? And are there states where you feel, because again, you know, building these companies is about having great people. The culture you've built at AIR is extraordinary.
Well, the other thing about our approach to kind of building out our company is we really believe in, of course we believe in people, and we believe in the power of growing a great product, but we also really believe in diversification. So one thing that we think is great about our footprint is no one of our 8 states today is more than 20% of our revenue. That's important to us because weird things happen in these states because this is a business that is just being born. So not over-relying on any one part of our footprint is very important. And being able to pivot between retail and wholesale, depending on the market dynamics, is really important. So it's important to have those great brands and a great retail brand as well. And it's important to have both of those arrows in your quiver, retail and wholesale.
We've really have seen the industry focus on this ability to navigate between wholesale and retail markets, and I think every one of these companies has the ability to do that and has chosen markets where they may have decided to be more of a retail footprint. Aaron, I feel like there was a period for 12 months or so, every time I looked up, Verano was doing a deal and bringing on another state. So just give us your philosophy on the footprint and where you have chosen to operate. Obviously, Verano's in some of the, really all the key markets.
I mean, I think Matt and Jen touch on some, key points here. I mean, people, vertical integration is like where the focus is at. And we have done 16 deals over the last year. We closed 14 of them, and everything's been very strategic and deliberate. So, we're not just trying to add assets to beef up the actual state footprint and make that map slide that we all have in our investor deck look better. We're actually, strategically building out from a vertical integration perspective. When you think about the inception of Verano, we knew that we could be profitable from inception. And so having that mindset and then layering that on state by state by state, that's where the vertical integration comes into play. And so what we've done over the last 12 months, we went public, we did 2 equity raises, we did 16 acquisitions, closed 14, 2 amendments to our debt deal, got past the lockup schedule, and again, I had to go through all this at Cresco. I mean, that's a massive undertaking over the last year. And the key to that is it made us a relevant player. Like, we knew we could be a tier 1 profitable operator in the space. And the way that we grew our footprint, we feel is, again, been very strategic and deliberate. So, when Jen's talking about the people, I think, the biggest misconception in this space, and I think this is going to, trickle into some of the market stuff that we're going to talk about, we're not a mature industry. Like, we have to evolve, and we have to make sure that we can absorb market growth. So for us, what we've also done over the last 12 months that nobody will see on paper is we've done almost like a reorganization, a restructuring. So when we had so many assets in the Northeast, everything's not running out of Chicago now. We have a team out in the Northeast, we have a Midwest team, we have a Southwest team, and we're making sure that when we start to layer on these new assets and as market growth starts to happen, we're able to absorb that and stay ahead, a step ahead of market growth. New Jersey is a great example of how we've positioned ourselves in a state that's, transitioning over to adult use. So.
Yeah, and I think the concept of which states are more profitable than others is something that the industry is coming to grips with. It's almost extraordinary to me how the market, the investor community, the analyst community, and even folks outside the industry are looking at the margin profiles of these companies in as if they're suddenly not profitable entities. And in fact, it's kind of absurd that, yes, there has been some margin degradation, but that, first of all, New Jersey will have a 2 to 3 year window of crushing it. And
100%.
There's that exposure there. And before we dive back in, really quickly, notable though, we haven't really talked about the rest of the world and what might differentiate, one of these companies. I mean, first of all, Curaleaf, you have a presence in Europe. Every one of these companies is thinking about the world. Every one of these companies is thinking about the markets that are the markets they want to get after right here and now. Just mention Europe, Matt, and how you view that.
Yeah, look, I think we're looking at Europe as the U.S., 3, 4, 5 years ago, where you're going to have a huge market. I think it's a 230 billion person addressable market. We're currently in 8 of those markets today. But when you look at the growth, 3 to 5 years out, of course, there's a lot of runway in our home country here. So we know that there is plenty of growth to be had right here, and that continues to be our core focus. But as you look, on the horizon, longer term, Europe is going to be a massive market. It's going to have a different profile than the commercialized market here we have in the U.S. But we're extremely excited about the opportunities and continuing to take the brands and the products and the knowledge and experience that we have built here and bring it overseas.
Emily, how are you thinking about the footprint of these companies, and how globally are you thinking about it? Because again, as someone that talks about cannabis on CNBC, I'm invested both on the hedge fund side. I run an ETF, and I've been investing in emerging markets my whole career, and I consider cannabis an emerging market. And the righteousness about the U.S. market over other markets, and obviously Canada, to their credit, really federalized first, at least in a major way, and obviously we all know the capital markets dynamics that have this industry struggling, scratching their head, really. I mean, I think the industry actually, if you think about how successful these companies have been without capital markets, think about what they're going to do when capital markets come on board. But Emily, I mean, a lot of people rightfully point out the U.S. is the biggest market in the world. Why would I want to focus anywhere else? And again, I think there's too much actually over-righteous. I want to invest in places I'm going to make money, and I think there are places to make money everywhere. How do you think about this?
Yeah, so we were early investors in Canada, rotated that capital into the U.S. as we saw U.S. lifting off, and I still think U.S. is going to be a tremendous opportunity from the CPGs, like really getting into that category and hitting it beautifully and hitting it hard. On the global play, we've invested into Colombia, Mexico, and Western Europe, and the way that we've participated in that supply chain is investing more on the medical side and looking at EU GMP certified operators who have experience in more of the pharma and strong wellness background, and just putting the product along the rails of an existing infrastructure around quality control and making sure the consumer is getting a certain tier of product and quality of product. It's a little bit different than what we've seen here in the US, which has been really fast and aggressive, and these are kind of, it's just like a slower, a bit of a longer tail play. But I agree with you, Tim. I think that if we ignore the rest of the world, it's a little bit of hubris and a blind spot. So we have to be wise about how we approach it, and I have been interested to see how the different MSOs have kind of put down flags in other countries.
If we were on any other investor forum and the world we live in today, we'd be talking about inflation. And I don't hear the cannabis industry talking about inflation. In fact, I don't hear about it from a wage inflation perspective. And again, labor markets that in this country appropriately, I think, making a middle class wage is something that's getting easier to do. The Walmarts, the Targets, the Starbucks of the world. But cannabis has inflation pressures from all sides, I think. And I want to hear your view and how you're handling this, because again, there are the cost inputs to your business. There's obviously, if you're a food retailer, and in many cases a consumer staples retailer, higher food prices actually are good for your business. And actually, you that's an environment where you can make more money. So I just want to hear how you're addressing inflation, Matt, and just what does it mean in terms of setting up your business and some of the costs, and how they changed in the last 12 months? And I want to hear from Jen and Aaron too.
Yeah, so I mean, obviously cannabis has a slightly different supply chain than many other businesses. Our cannabis supply chain is obviously state by state and is not necessarily impacted as much by some of the things going on overseas. We certainly have a lot of inputs to our business, packaging and hardware and supplies and a lot of different components that we do rely on for our supply chain, and it's caused a lot of interruptions, there's no doubt, the last few years, with longer delays and more lead time and planning and us having to buy in larger bulk at times to ensure we don't have interruptions. So I think we've learned a lot on that the last couple of years. We've been living that now for a few years. It's interesting on the cannabis side. Again, it's very market dependent. Some markets, supply is exceeding demand at this point. So you're not seeing inflation in cannabis prices. You're seeing deflation in most cases. I think in some other markets, this leads into brands and quality products. Ultimately, if you have a brand that has loyalty and you have a quality product, the prices are holding firm. In some cases, they're going up. If you have, other product that is not getting people in the door, you've got pressure on pricing. There's no question.
Jen, you can address, Matt brings up a great point. I mean, deflation on some level can also, though, be very beneficial from wholesale to retail, where retail prices are holding up. They're holding up better, and you're all seeing the same data I am. Retail prices are coming down, but not as aggressively. So you can address it from inflation or deflation.
No, I mean, I think that in today's environment, it's even more important to provide an excellent customer experience, both in your retail store and in the products, branded products that you offer, because people's hard-earned dollars are coming out of their pocket, and you're getting less of their share of wallet because of inflation in other parts of their lives. So I think it makes it even more important to have excellent products, excellent brands with consumer loyalty, and an excellent customer experience in the store. So it just reinforces all the things that are the most important for our business that we know. We know these are the important things in our business, but it just reinforces that because those hard-earned dollars, and they have to be dollars because this is the only market that you cannot finance. You cannot put cannabis on your credit card. You gotta take $1 out of your pocket and give it to the bud tender. And that is a different thing. So it just reinforces all of the things that we know to be true about building a great CPG business, building a great wholesale business, and building a great retail business. And I can only say it's gotta start with premium, excellent flower.
What company sets out to, we're going to make decent flower. We're going to we want to be in the middle of the pack. No, but you're right, and that's critical. And Aaron, I would just say, complete however you want to answer this whole pricing environment, whether it's on the macro and the inputs or but what every company here knows is that having that brand, having that connection, having that retail experience, having quality, having established shelf space is how you preserve and maintain margins. And ask every sophisticated CPG company in the world. This is what they do. This is why when we say we're in the first or second inning, we really are, because in fact those brands, these companies are the brands right now. But
no, I mean they touched on a lot of the key points here. I mean, quality is king. I mean, if you're not putting out a quality product, it doesn't matter what your packaging looks like. Back in the day, 2018, you put it in a shoebox, duct tape it, write G-Perps on the box, and somebody would come and buy it. And so it's up to us to have that consistent quality coming out to the market. And again, that's being able to invest back in your operations and making sure that customer experience. The last time you come into a ZenLeaf dispensary, that's what you're judging us on, and we know that. And so again, to Jen's point, hard-earned dollars are being spent. We take that seriously, and we're all fighting for the same consumer base, and we're all fighting for the same customers. And I think, one thing when we think of, we're all looking for trends, and we're all looking for pricing trends, and we have to answer these questions all the time. We just went through a 2-year pandemic. I mean, and now there's a pending world war on the horizon. It's we haven't operated in a normal environment in years. So when we're trying to find trends and put metrics out there and give the market ease that we're actually seeing some consistency with pricing, we really don't know at this juncture, just given some of the dynamics of COVID and Omicron and all the stuff really escalating in the market.
The other thing I would also add is that with respect to pricing, I think people think that we are further along in the adult use development east of the Rockies than we are. You have Illinois that's established, but the retail license, the whole retail storefront situation in Illinois is held up in the courts. So you have more supply than demand because people are reasonably bringing supply onto the market in advance of demand, but those retail stores are held up. So you don't even Illinois, which is the closest to a market in equilibrium, isn't truly in equilibrium. And no other East Coast state, no other east of the Rockies state actually is in equilibrium. People think Massachusetts is because it's been adult use for a number of years, but there are 5 stores, maybe 6, in Greater Boston where 60% of the people in Massachusetts live. There are no stores in the places where people live in Massachusetts. So it is also not in equilibrium, and it will get there as stores open over the next 18 months or so. People think New York is rec. It's not rec. It's not. You're not going to have anything until 23. People's like, oh, New Jersey's rec. We're going to have 13 stores in New Jersey in the next couple of weeks. 13. It's an 8 million person state. This is early days. And talking about what is happening to pricing dynamics right now ahead of all of that adult use demand coming online on the east of the Rockies, we should have this conversation again in 18 months. And of course we will.
And
I will.
Oh.
Go ahead, Emily.
Just quickly to jump in, just one thought on inflation is actually CNBC posted a survey about inflation.
It's got to be, right?
I mean, it's got to be good. But it had people weighing in about how inflation may be impacting their behaviors. And so one of the things when we're watching consumer trends in cannabis, and to Aaron's great point, we've not had a period of normalcy in a while to see what true cannabis consumer trends are going to look like. But during the pandemic, when people were home more, we saw a spike in cannabis sales. And every time a check went out to people, we saw sales spiking on our headset data. And this survey came back and said that people are going to start thinking about maybe traveling less, maybe eating at home more, maybe not going to the movies as much because of the impact of inflation. But guess what does really well in the home is cannabis. And so this is something that we are going to be watching very carefully because during the last recession, there was actually a spike in buying wine and different things at home because people were cooking at home more and doing these different things. So these are just consumer trends that we're watching in where cannabis can be consumed. Because as soon as people went back out, they were going out to bars, restaurants, traveling again, there's not really legal public consumption for cannabis in the vast majority of these markets. And so it's a limiting factor in terms of consuming it when you're out and having these experiences. So it's just one of those things that I'm watching from another angle of inflation.
But P.S., that's also another growth area.
Sure.
100%.
100%.
Maybe it's 5 years from now, maybe it's 7, maybe it's 10, but cannabis will be more normalized, more mainstreamed like alcohol, and consuming a wonderful cannabis-infused seltzer will be what people do much more than they do now.
Huge area to unlock.
I mean, Starbucks has been selling the $4 luxury cup of coffee for a long time. I mean, I think cannabis is giving people a lot more luxury and a lot more escape. And, I'll just say, I think in terms of the cannabis COVID comps, this has obviously been part of a sequential growth story as we've all been looking at the earnings over the last couple of quarters. That's been a headwind. You're going to lap those comps pretty soon. I mean, I think people have to understand, and if they listen to every one of these companies, the second half of 2022 in terms of top line, definitely more than balancing out possibly margin pressure through the size of the addressable market is kind of a no-brainer. And this gets me to another topic. We're covering a lot of ground, but we only have 13 minutes left, and we've got more to do. I want to talk about the illicit market. Because again, I think COVID stoked the illicit market. I think obviously the perception changes in this country for the positive are obviously stoking the illicit market. I live in New York City, and I'm very concerned about how this market's going to develop because I think I think there's a green light for illicit market in New York, and we've seen how it's hit the West Coast. So differentiating, at least in the context of how do you view the illicit market, Matt, and how are you choosing to either wage war or fight back, or, in some cases, again, in some states, supporting legacy businesses is actually a good thing to do for your business, even though it's you're fighting them every day.
Yeah, look, I think this has been something that's been out there since long before the regulated industry existed. The traditional market, continues to thrive, and I think, as we have always said, we view our biggest competitor not as Verano or Air or anybody else. It's the illicit market. That's ultimately what the competition is when it comes to pricing and availability and convenience and all those things. And I think what you're seeing with the lack of enforcement in some of these markets is a real challenge. You go to New York City and there's bodegas throughout Manhattan that you walk into, and you would think it was legal if you're an uninformed cannabis consumer. You would think it was legitimate, and it's not. These are not regulated, tested products. That's a threat for our industry. You go to the World of Weed van pulling around Manhattan.
Are they really selling weed, or is that just? I mean, who wants to? I mean, how could those vans be parked right next to cop cars?
I know it's incredible, and frankly, for those of us that are paying 280E taxes and that are employing a lot of people in that, like, it's really very, very frustrating, and we think it really unfair that the way that is playing out. But it's a trend that we as an industry need to kind of deal with, but it's a real problem at this point.
Aaron, how are you guys addressing the illicit markets? Because you're in some markets where they're alive and well.
For sure. And I mean, part of the Goodness Growth acquisition, I mean, we took illicit market into consideration here. And so what we look at is how can you compete, right? And why is it even thriving in the first place? And it's consistency. I mean, you can go to Manhattan, order an eighth of weed, and it's in your hotel room in 15 minutes. And, sometimes quality isn't necessarily going to trump convenience. And so for us, we have to figure out why the illicit market is working. And, we can't just turn on legal and expect people to come into our stores. We have to, again, it has to be the consistency of product, quality of product, availability of product, and making sure that we give people an actual incentive to transition over from the illicit market, because otherwise people are going to stick with the whole convenience. Sorry about that. The whole convenience aspect of why the illicit market's even thriving in the first place. But it's something we do pay attention to. We know we're not going to transition the whole market over, but we do know that we can actually take a bite out of the illicit market if we can actually compete, basically on their same playing field there.
I mean, it is a concern because being based in California, I can see what it did to the LA market, watching the retailers having to compete with multiple illicit doors right around the corner from them, not paying taxes, not paying employees well. I mean, it's a myriad of issues, and the longer that it is allowed to go on, the more tenacious it is and more difficult it is to pull it out. And look, we have to acknowledge that this industry came from a root of illicit operation and bold and brave people who really saw something in it and pushing it forward. But then there's this other side where we now have to pull it through, and it's really for the best of the consumer because of the testing of the products and the quality of them.
It's an issue that we're wrestling with every day, and it's the good and the bad of the industry. And Oklahoma weed is all over New York City in a way you'd never believe. Let's change gears. Let's talk about differentiating these companies. And for the investors in the room, let's be clear. Investing in industries where you have they're nascent industries, they are newer companies. There is less in terms of track record to draw from in terms of financials, in terms of corporate governance. Let's talk about differentiating in terms of how you report your numbers, how you represent corporate governance, how you believe actually you are establishing a relationship with the investor community, because every one of these companies has been successful because that's probably what they did better than almost anybody. And that's been critical. As an investor, from my chair, I feel like the industry should be not talking about adjusted EBITDA. I think the industry should be talking about free cash flow from operations. I think while we all expect 280E will be addressed at some point, and for those that don't know what 280E is, it's essentially predatory taxation because it's an illegal Schedule I drug that can't properly subtract normal cost of goods sold, et cetera. So that's my rant, because I actually think that ultimately you're all trying to do the best you can do in an environment that really has nothing to do with you. You'd love to be able to have traditional accounting. And adjusted EBITDA, by the way, exists in a lot of industries outside of this industry, and that's my PSA. Kick the tires and understand what adjusted EBITDA means. So, Matt, because we've got about 8 minutes left, I think this is a really important topic for all the people up here, including the investors like Emily. Just talk about how you think about investor dynamics around your accounting, corporate governance, and why Curaleaf stands apart.
Sure, yeah. So look, I think unlike a lot of other industries, we've got a really wide spectrum of investors. Obviously, the retail investors still play and continue to play a huge role in the market. And there's a lot that we do, to try to speak to that audience, which is different than the institutional investors, which are, part of our cap table, but not, it's still dominated by non-institutional, as we know, and there, different audiences for those things. But I think, we try to be really proactive with our outreach to all universes of investors and really share visibility on what our strategy is, what our differentiators are, where we see the growth opportunities, where we see the challenges, what we're doing as a management team to continue to build our team and our culture and all the things that we are doing every single day. But I think a lot of it's about continuing to provide more information. A lot of the financials and things like that have been reported over time, don't necessarily give you the ability to drill down into a lot, detail when it comes market by market, things like that. So I think we attempt to provide more of that insight because, we're living this every day. We have the information, we're on the ground, we're operating there, so we can provide a valuable resource in terms of sharing those things.
And Jen, extend on that, and maybe, I know you have a ton of experience dealing with sophisticated institutional investors and understanding what they're looking for. What are you seeing right now? What are you hearing from these folks in a world where we know there's a wall of capital that's waiting to come into cannabis and cannot, either structurally or will not because of some of these issues? They can, but they won't.
I mean, I think that, well, first of all, our philosophy with respect to our approach to investors has always been to really embrace transparency. I think if you believe our investors, maybe they're just being nice to us, but consistently they say that we provide some of the most complete and comprehensive transparency around our financial statements, around our projections and the assumptions that underlie them, around kind of the detailed reporting that we give. And that's always been something that's important to us because we think it's important to communicate well with our stakeholders. But what I'm hearing from them now is they just want custody. They want to be able to buy a cannabis security, a stock or a bond, and put it with Pershing, because that's the person who custodies their securities. They're tired of having to move around to this prime broker or that prime broker, or this high net worth, I got to go to Charles Schwab. They're tired of it. They just want custody. And that in and of itself would be a huge boon to our industry. I think everyone's super focused on safe banking and super focused on exchange uplisting, but just custody would open up so many more new buyers to the industry because they've all been shut off over the last 9 months. How many people in the audience are in a position where they can sell or hold, but they can't buy? So many of our investors are in that position.
Yeah. Emily, why don't you go ahead and just give us your views on any of this? Again, how you're rating companies, how you're judging companies, how you think about this.
Yeah, I think actually Jen and Matt, but
or the plumbing issues you may be assessing, and I don't mean Roto-Rooter. I mean actually market infrastructure. That's what we refer to as plumbing, which is clogged.
Oh yeah, I mean, as Jen pointed out, the whole uplisting thing is very top of mind for us because I do think the exchanges. I actually do work with this group called Attach, and it's about the capital markets and trying to get more exposure in connection with the listed exchanges because we can all see how the Canadian names trade versus the U.S. names because of where they live. And so I actually do spend a lot of time trying to understand each of the companies and how they're preparing for that because on the day when it does become available, I do think it will be very beneficial. And I agree with Jen, too, about the custody. We have dealt with that through our entire time being in this industry. I've watched a lot of our investors deal with that, and it's a significant pain point, and it's a massive block holding capital on the sidelines. But I also think that kind of part and parcel with that is the access to the listed exchanges that will also work really well for that. So we are looking at board composition, compensation, reporting, transparency, all of the key things that we know are not just about being GAAP or IFRS and what metrics you're sharing or disclosing, but we try to look at all of those other factors because we'd like to think about who has that opportunity to pop right onto the NASDAQ, for example, if it becomes available.
Thank you. Aaron, go ahead.
Yeah, I mean, obviously we touched on a lot of key points here, and I think, the big thing that we look at, and it's more of a tagline for us, is that it's more about positioning right now than performance. I mean, Matt touched on retail. I mean, you're 96% retail owned, and if you want to know anything about Verano stock, I mean, Q3 we announced 54% adjusted EBITDA margins. We have $43 million of free cash flow through 9 months. and our stock traded down. Right? Nancy Mace sniffs at legalization, our stock's up 25% in 3 days. But we can't worry about that right now. We have to continue to position the company to take advantage of the opportunities that are ahead of us. And a lot of this is institutions and it's exchanges as well. We're all fighting for the same dollars. We're all talking to the same investors, and we're trying to, differentiate ourselves from Cara and Air and all the other companies that are in our space. But right now, we have the mindset that the tide raises all ships. We all need to succeed on the institutional basis and the exchange basis as well, and we all need to keep doing our work. And so we are having those conversations with people who are like, we can't pull the trigger, but we have to get them up to the finish line. And if it's safe passes, or if it's safe with an AML provision or something along those lines, and it gives them the okay to go across the finish line, we'll be ready. And so it's from the exchanges, it's institutions. Our world is going to look a lot different when we can flush out this Twitter headline noise and finally get some real institutional
Good luck with
knowledge.
that, by the way. I mean, that's not happening. And we've got a minute and a half left, and I like to run a tight ship. I'm also on a show called Fast Money. So let's act like this was a roto snake draft. So back down the aisle this way, starting with you, Aaron. Give me a wrap. Help me understand just how this group should encapsulize Verano and how you're thinking about your differentiation here.
Industry as a whole, don't get frustrated. I mean, we live it. Our lives are invested in this space. Like, we're not going anywhere. So we're continuing to work on a daily basis to make sure that we're positioned to take advantage of, the opportunities that are ahead of us. So for Verano, we're going to keep hammering down on our strategic plan to build our footprint, and we're going to do it on a profitable basis.
Thanks. Emily.
I would just say that this industry was never going to be a straight, linear, up and to the right story. It was always going to be a stair-step growth. We're about to see massive unlocking with New Jersey. We talk a lot about federal change, but our biggest focus is the opportunity at a state-to-state unlocking of a legal market, and we will have enough strength and we will see enough growth and the metrics will look good enough that we'll get to keep going. So I'm really excited about the quality of the companies that we're seeing in spite of all of that other noise. So.
Excellent. Jen.
For Air, I would say the key things that drive us every day are our commitment to excellence in people, our commitment to excellence in what we grow, our commitment to excellence in the brands that we are building, and it is white space across the board for us and every other company, but being committed to be the best CPG company we can be, the best grower we can be, the best company that we can be. Is what drives us every day. And management is the biggest shareholder of Air, so we are 100% aligned, and it is just a super important thing every day when we get up and go to the office. We love working together, we love building this company, and it is the hardest thing I have ever done in my life. And I rode crew, and I was a physics major, so it's tough.
Rowing crews, no joke. Matt, please.
Yeah, look, I tell my team every day, we got to control the controllables. That's we got to focus on. I think what's going on behind the scenes at Curaleaf and some of the other MSOs is we're quietly getting stronger, smarter, growing, more profitable, all those things. Some of the market forces, those will ultimately take care of themselves at some point. But what's going on behind the scenes is that we're all getting better, building more distribution. We're in 2,300 doors nationally, 130 stores. That's power. That's more ways to sell more products and brands. And so we continue to focus on those things. The other stuff will ultimately take care of itself.
And I'll just say this in closing, because they wouldn't say it, or they probably shouldn't say it, but a lack of a federal headline for this industry makes their businesses stronger every day. And so in a world where also, if you tell me the news, I'm not sure I can tell you what the market will do. We know the market's going to move higher on some type of federal announcements. We don't know what those announcements are going to actually be. And we know outside of that pop and that short covering, where the markets are really going to react to some of that news. So the message here from all these folks is be long-term investors. Be investors in a space that's growing absurdly fast with companies that have been early players and well-established. And clearly, I think you're all doing your work. When you look under the hood, you can see that these companies are different companies and that they're all unique in their own way, and they're all kicking butt in an industry. So thank you very much. This has been a great panel. And Benzinga, thank you.